Hello, Jimmy Kinley, Guild Mortgage. I hope this email finds you doing great, and I hope you're having as good of a day as I'm having, because I'm having a great day. If you watch my videos, you might have seen me get hung up on my soapbox of jobs reports over the last year and a half. Um, the big factor, if you've heard me talk, that kind of kept rates from coming down so many times, every time we got mortgage rates cruising in our favor, we would get this blockbuster government BLS jobs report that said that the jobs market was just amazing. The frustrating part for people in my industry or people who are watching this government generated report was that the other jobs reports that are put out by payroll companies like ADP and things like that were giving totally different data, showing that the job market was weaker than the BLS jobs report, and to the tune of half the amount of jobs being added. The reality is that we were getting some questionable numbers from the BLS jobs report. In fact, the again, if you watch my video, the jobs reports that came out last year, the real numbers that were added when the numbers were finalized were half of what those jobs reports said. The reason this is super important again is because these are factors that cause investors that invest in mortgage-backed securities, that cause those indexes to go higher and rates to go lower. These are factors that cause them to not want to invest. Well, as you may realize, the last BLS report came out. The person who runs that department got fired. The real numbers came out, and we just got another BLS jobs report today that was way below expectations. And they even lowered the report from last month that was also well below expectations. This is big news because this shows investors that the jobs market is not super strong. Getting one of those reports was good for us. We've seen rates come down about 0.3% since the last report, but getting two means it's real, and these numbers are real. The reason that a weak jobs report is a really good thing for mortgage rates is because that shows weakening in the economy and possible signs of a recession. And if you look at the historic data, every time there's a recession, that's the lowest point for mortgage rates. And that is simply because investors move to safer investments like mortgage-backed securities, which we are seeing happening today. We've seen rates start to move already in our favor today since that report came out. And I think this is really going to solidify the trend of those mortgage rates keeping steadily going down. Again, it's not going to happen overnight. It's slow. It's painfully slow. But the reality is, like I said last month, it seems like the stars are aligning, and now I really am starting to feel confident that rates are starting to trend in our favor. So whether you're looking to do a refinance, I'll be watching that. If you're looking to do a purchase, then I'm going to tell you what I say all the time. Don't wait until everybody else is out in the market. Competition creates much higher prices, much less ability to negotiate contracts, much less ability to negotiate inspections, and all kinds of things of that nature. So my advice is get out before everybody else does if you're looking to buy a house, because once it heats up, it's too late. By the time you hear that the market got hot again, it's already happened. That data comes out a month after it's happening. So I just want to let you know the good news. I hope you have an awesome weekend, and I hope you're doing great. Let me know if you need anything. 720-261-1410.